Just hello, everybody. Hello, Estelle. Hello, Costa. My name is Lázaro Campos. I'm your host today, looking at this or talking about financial inclusion in these troubled times. So with me today, we have Estelle Brack, and Costa Peric, two experts in financial inclusion, I hope, because that's why we invited them. And we are going to be looking at a very broad brush of status update on financial inclusion, specifically how COVID and the pandemic is having an impact in that area. And we will also be talking about low-income countries as well as mature countries when it comes to the issue of financial exclusion. But before we do that, let's talk a little bit about our guests here today. Estelle, you run a consultancy. You are involved in the financial inclusion area with a distinguished career in banking, in Natixis, in the French Banking Federation. You're a senior lecturer in Paris at the university. Give us a little bit about your background when it comes to financial inclusion, please.
As working for payments for a long time, I really could see that some behaviors were very important and very determining the way people use the different ways to the different means of payment. And some people use cash, some other people use checks in France, some other use cards. And globally, we could see even in our countries that not everyone is very comfortable with payments. And as an economist, I'm more than 12 years ago, I met Africa, and I discovered that only 10% of the population in Africa was banked, or 15%. So how people could access banking instruments and how innovation could find solutions for people to access banking services and payment services. So that was really, really interesting and kind of intellectual revolution for me, that seeing how people could find local solution and really more than innovation, I would say even disruption in Africa to solve these problems.
And Estelle, you were telling me earlier today, which I found very interesting, is that in your mind, at the heart of the problem is not whether there are funds available to support projects, is that the solutions that are being designed by people like me, who may not be local to the country, who may not be too truly knowledgeable on what works in which location. And you gave me the example of Google Maps. You could share that with us again, please.
Yeah, when you ask Google Maps to show you how to go from point A to point B, it always takes me more time than expected to go from A to B, because I guess the Google Maps is designed and the algorithm are made by a white tall guy from Norway, for example, that works really faster than me. So the idea is that the globalization make people similar in some ways, but there are many local specificities that we need to take into consideration.
Thank you for that. Costa Peric, welcome to our podcast. So Costa is the deputy director of financial services for the poor at the Gates Foundation, the Bill and Melinda Gates Foundation. Has been there now for 7 years, Costa?
Almost 7 years.
Six and some.
Yeah.
And previously, and that's what we overlap, part of our common history was SWIFT, and he led SWIFT, the innovation group at SWIFT for a few years, and prior to that, he was the chief architect of SWIFT's network, the second iteration of the SWIFT network. So Costa, welcome. I guess that the Bill and Melinda Gates Foundation does not need introduction, but it would be interesting for you to just maybe tee up the challenge of financial inclusion as we understand it today. Not when you arrive to the Gates Foundation, but today, and how have you seen that change from the moment you arrived to today? What has been that journey? So today, and see how we got here.
Mm-hmm.
Please.
Yeah, I should perhaps just say a few words about the methodology as well that we follow, because that is quite relevant. So indeed, our goal is to help connect the 1.7 billion people that are unbanked today globally, 400 million adults in Africa, to a adequate system that allows them to be participate to the economy for their own good, but also for the good of the economies in the low-income countries. The methodology we have followed from the beginning is focused on helping governments, central banks, and private sector entities to deploy digital payment and identity platforms. So it's really focused on the infrastructure side of financial inclusion, rolling out these platforms that enable this immense amount of new consumers to be connected and to be able to transact in various ways.
So sorry to interrupt,
Yes.
Costa, but because that's a really important, statement. Is financial inclusion and financial inclusion programs are not charity.
No.
What you're saying is they actually are a win-win. As you include people with lower incomes into the economy also benefits. And that's your positioning. Is much beyond charity. This is about enabling digital economies and by including everybody in economic growth.
Yes, we are saying an economy that includes everyone benefits everyone. Right. And that gets me to your question about where we were 7 years ago and where we are now. I think the basic innovation or disruption, as Estelle says, has already happened 10 years ago with the advent in Africa of mobile money. The M-Pesa were the pioneers of this. And what they have shown is exactly what you were saying, Lazaro, is two things. One, that it is possible to reach the poor where they are through mobile phones, very simple mobile phones. We are not even talking about smartphones. And allow them to essentially send and receive money the way you send and receive text messages. Right. So, and they have shown this is very helpful to these households and individuals in terms of getting out of poverty and participating to the economy. But secondly, as importantly, it has shown exactly what you were saying, is that there is a way to do this in a profitable way for commercial companies. And that is very important because no amount of charity will solve this problem. The problem of financial inclusion will be solved only if there is interest from commercial providers to serve the poor, albeit in a different way, and so on. So what has happened over time is that many commercial companies in Africa and Asia have embraced this. There is today in excess of 150 mobile money operations in Africa alone. So I think the challenge today, and we have really shifted to how do we scale this so that we can cover the 400 million African adults, the 1.7 billion people globally, in a few years, 5-6 years, because at the pace of extension of these digital financial services today, it will still take 20-30 years. So the challenge today is scaling. And what we focus on is these digital platforms for payments and identity that are essentially about interoperability. So how all of these systems can grow from being silos, albeit very successful silos, but still silos, to connect to each other so that ultimately a woman in Kenya can send money in real time to a have a friend in Nigeria. That is the ultimate goal that we all hope to achieve with the governments in Africa and central banks over time. The other point I want to make is very important, which Lazaro, you mentioned, but I can't emphasize how important that is. What we are doing is helping the local stakeholders. We come with tools, we come with methods, we come with knowledge about how others do it, but ultimately the programs that we support are driven by local stakeholders because they know what is best for their country.
Thank you, Costa. Estelle, you were nodding furiously with interoperability and also with localization. So please.
Yeah, thank you. I fully agree. Interoperability is very important. M-Pesa is a good example, but is also a bad example for Africa because M-Pesa is very largely developed in one country, in Kenya. So everyone in Kenya has one mobile money system as M-Pesa, but in other countries, we have several solutions like the different operators. So these are closed loop private money systems that not necessarily discuss to each other. So if you want to send money to your neighbor, if it doesn't have a wallet on the same mobile MNO operator, so you cannot. So there are also platforms developing to build this interoperability within each country and between different countries. And on the second point, I also strongly believe that the aspect of financial inclusion and scaling up is very difficult because it has to be, it cannot be spread by helicopters. It has to be done with people, and so it needs time. And this is also why maybe it takes time, because we need to talk and to explain to people how mobile money system can be interesting for them, for their activity, and also convince reluctant people to new technologies, and they might be afraid with putting the money from cash you can touch to a mobile that this is this is not cash anymore, or this is not paper anymore. So this is why also we are convinced that financial education, financial literacy is very, very important and very, very much linked to financial inclusion. And that's why we founded a network of financial inclusion programs led by local people in Africa, named RASEF. This is the French acronym. But this is something we are trying to make experiences, programs shared between the different countries to make it grow.
And you've raised a very, very important point, is that, you know, we say financial inclusion, so you would expect that everybody wants to be part of the financial services world. Well, nothing could be farther from the truth. Most people don't wake up saying, well, I need to do a financial instrument today. They know what they need to do, and cash in many cases does it just fine. So it is not only about lifting the obstacles that Costa was referring to, interoperability, infrastructure, and regulation in many cases, and so on, but also bringing in the different groups to understand what the benefit for them would be to be using a phone instead of using cash, and what the whole setup at an individual level of how to take advantage to this. Absolutely right. And financial literacy is at the heart of this.
And if you allow me a comment on this, perhaps an angle which certainly we will cover more, which I wanted to flag for now, is that another important evolution is that financial inclusion is more and more also focusing on women, because there is a big gender gap in terms of financial services used in Africa and Asia, sometimes as much as 25% less women use financial services than men. And so to the point you were just making, Lazaro, we have observed that solutions if nothing, all things being equal, solutions provided today to people are by default targeted at men. So if you don't do anything, you will end with solutions that benefit men. And so adding the gender aspect to how solutioning is done is also something we work very much with with the local stakeholders.
Absolutely. Absolutely.
If I may, we know that women are usually putting 70% to 80% of their earnings into the community. Right. So making women able to earn and manage their money is very important for themselves, for the family, and more largely for the community.
Absolutely. Let's move into possibly. I mean, this gives us a very good background of where financial inclusion is and how we've gotten here, and the key challenges that one needs to address and the objectives. Is how has the pandemic impacted programs, interest, prioritization of projects? Costa, have you seen a deceleration? Have you seen any impact with COVID?
Yeah, we have seen a huge impact of COVID on this general topic of financial inclusion, and also related to payments. So one of the key use cases before COVID of when you have these payment platforms rolled out, perhaps the first use case that always comes is government payments. So what we call the G2P payments that are typically used for many purposes, salary payments, pension payments, but also financial support of various ways and welfare support to the population. So this was already very important, and as I said, in most cases, the primary use case for the platforms being developed. With the advent of COVID, this has tremendously accelerated interest in digital payment platforms, generally speaking, as a delivery mechanism for support and welfare payments, but also, of course, in accelerating financial inclusion, because as you can easily imagine, most of the people needing help would be the poorest. And so there is a tremendous increase in attention to essentially all of the methods that we have been working on so far. And it's interesting to observe how the low-income countries are kind of leading the way here, because if you look at some countries, for example, the United States, but I understand in France too, one of the methods to help people is to send them checks, print and send checks. This is kind of like really showing how existing systems can be cumbersome and full of friction, while digital system can be deployed faster and much at a lower cost. So the whole area of COVID has tremendously increased the focus on financial inclusion and digital payments generally.
And you've seen your programs in Africa. Did you go through a period where it all became pretty much in pause and then now it's accelerated, or you just saw there was no impact whatsoever in the delivery or the engagement from the community? If
there was pause, so we have 5-6 ongoing, right now active programs to support deployment of payment platforms across Africa and Asia. If we have seen delays, it would be logistical delays due to, supplies, so a couple, 2-3 months, but certainly not any deceleration. At the contrary, the focus has been increased to get this out the door so that digital payments can be delivered easily.
Right.
Yeah.
So Estelle, have you seen any impact? Are your services demanded more than ever, or how have you gone? What impact have you seen?
I've seen, yeah, firstly that we don't use checks that much. not as much as in the US. But I fully share with Costa that the COVID crisis has revealed some problems and very interestingly in the US that has a very large unbanked population that's not only in Africa. And in France, COVID has pushed the use of cards at low shops, at small shops like bakery and so on. So that's interesting to see that some people who were reluctant to use mobiles to pay or cards to pay or mobiles to access their banking account. And these are very, there was a huge change in the behaviors.
Absolutely, shift in adoption, yeah, please.
Yeah. And I've been asked quite a lot to intervene on a very interesting subject with the crisis. It's central bank digital currencies. Mm-hmm. It's how the issuing by central banks of a digital currency, which would be a fiat currency, that would be a public digital currency instead of a private one, such as the one issued by the mobile money networks or the all other networks. That is very interesting. So the economic debate is very active on this subject, and how central bank could issue something that would be digital but similar to cash. Right. And so such a currency in which people can build trust.
Right.
So that's very, very interesting. Okay. And secondly, people now really are feeling comfortable with remote working and using web conference tools, even for training. So this is something we are going to do, with training SMEs in Africa and wherever we stand. So this is also more the way we work, but this is global, very, very global vision.
Thank you. You pick up a subject, the central bank issued digital currencies, which could take 3 hours or 3 days on its own right. But there is you are right to make the link, because there is a direct link in between the use of digital currencies and the challenge of commercial money versus central bank money. Costa, have you is central bank issued digital currencies a subject that helps or hinders financial inclusion, or does not affect at all in your mind?
So right now it doesn't directly help, but the interesting thing, we mentioned that COVID was essentially an accelerator of current efforts. I would say that when the whole subject of digital currencies, and I think it started really when Facebook came with Libra. Essentially, and we can debate whether Libra is relevant or not, regulated or not, at length. But the positive point of this is that it made the regulator community aware that there is a problem, that the global financial system is not serving almost the half of the world population. And it's very interesting how I was in the last 2 weeks in several webinars with BIS, CPMI, IMF, how all of this topic of financial inclusion has now been brought to the front of the discussions again because of this other angle to it. And it's all very positive. I think the more people are aware that we have a problem, the better off we are in terms of collaborating and getting solutions. Now, whether CBDCs will be something relevant for farmer in Nigeria wanting to buy fertilizer for her crops. I'm not sure in the next immediate future, but they may be relevant in removing friction for the settlement systems in between providers within the country. And then they may be relevant in some cases when you want to have cross-border real-time payments as well. All of this is being looked at, but for now, I would say I'm very thankful that the whole subject, the digital currency subject, has raised profile again of financial inclusions to the forefront. So it's really great.
I think absolutely. I think there are three elements that are, well, there are millions of elements of CBDC. The central bank digital currencies is a broad subject on its own right. And there are too many declinations for us to do justice here. But I guess that there are 3 points that are of relevance immediately. One is they are digital. So definitely that is something we should care about. Second, they are central bank issued. So the whole economy is behind them. So that talks about commercial banks' money and central bank money. One is more secure than the other, and that's important. And the third, which I think is the most important of the three, is the efficiency. A €100 dollar or yen note is worth 100. You give it to you, it's 100. There is no erosion, there are no fees, and the fees are, the system takes care of the distribution, takes care of the printing, takes care of, but you as a consumer, if you have 100, you pass 100, right? So if we can transpose that to the digital world, where central bank digital currencies get the same treatment as banknotes do, because they are central bank issued, that lowers the cost of transactions. Because the problem we have with digital transactions is that immediately when a dollar is no longer a dollar, but it is a digital dollar, everybody wants to take fees out for it. Everybody sees that as a financial transaction, and suddenly you don't get a dollar anymore. I think that is, to me, the more important concept here is, will we be treating central bank digital currencies as replacement to banknotes with some of the same characteristics, which is the preservation of value? And if we do that, then this is hugely interesting for the digital world. Hugely interesting, because we create the precedent that you like to implement, Costa, in all your countries, is digital transactions, at least up to a certain amount, should be free.
Yeah.
And I think that debate, that is the part of the whole discussion that really, I think, interests me. I don't know whether that's how central banks see it, but that definitely see that they could be displacing costs they have today of maintaining the banknotes in digital, so they actually will be better off by doing, or that by providing free transactions. Well, any reactions to that?
Well, on my side, I think you framed the problem quite well, which is the friction that there is in the system today with the fees and so on. Removing that friction can be done in many ways. I'm not sure that CBDCs would be the holy grail that will remove all of that, because I think we have to look at this from the perspective of the consumers and users in low-income countries. First of all, not everyone has a smartphone, hence not everyone can actually have the computing power to process digital currencies of whatever, but everyone has the power to process a text message. So, so you know, that's kind of one point. Second point is, I have observed that we can remove friction from the system with digital platforms that use an account-based money system, not necessarily token-based system, as well, if not better. To remove all this friction. But there is friction in certain domains I mentioned, like central settlement within the countries and cross-border transactions, where I think these digital token concept may be helpful, but it's really up in the future. I, suggest reading the BIS reports, really helpful on understanding first what it is, because many people talk about this, but it's a complex technical subject. We have to learn all what it means. Yeah, so I don't know about you, Estelle.
I've read the literature of the BIS. I've read the 100 papers on the.
Right.
I was passionate about the subject. I am still passionate. I fully agree that it's interesting, but it has to move from the central banks, economists debate to the global ecosystem, and so, as well as today, cash has costs and costs that are undertaken by banks and people who transfer the banknotes, and also merchants, and so we have to have a global study of all stakeholders and how digital currency issued by central bank could be beneficial for all stakeholders and compared to cash. I did a study on the European Union and on the Eurozone, and my estimation are that if we just substitute 1% of payments to digital currency, the global ecosystem would make a benefit of 1.5 billion euros. So that there is a way where all stakeholders can benefit from it. But this is a very simple story, simple study. We have to take in all stakeholders into consideration and open the debate to all stakeholders. And I just wanted to mention that on the banknote, the vision of the banknote, that the Bank of China just issued a pilot from CBDC, and this is on the phone. You have the design, you have the picture of the banknote. So this is how the idea is to convince people that the digital yuan is close to the banknote, to the paper.
So you have a digital version of your bank now. Yeah. Is interesting. Okay, let's move. I think we've already done the segue, but I'd like to cover a couple of points before we have roughly 15 minutes left. So we've talked about Africa. Costa, any differences in any other locations? I know you're very active in Pakistan. You've been active in Bangladesh, directly and indirectly. You've also have programs in Latin America. Any views, and Estelle as well, are there any challenges or any differences that we see in financial inclusion now in other regions that are worth mentioning?
I would say probably not really. I think right now this concept of RTP, as we say, real-time payment platforms, is really, if you look at the way the RTPs are evolving, the curve is similar to how RTGSs were increasingly implemented some 15 to 20 years ago. So we see that same curve happening. And I think the governments realize that in the digitization of their economies, this basic infrastructure of payment platforms and identity platforms needs to be rolled out so that services can be layered on top that are specific to the country. Like, for example, every country have their kind of pioneer champion of new applications. Gojek in Indonesia, SolarPay as you go in Eastern Africa, the way that Mexico does some of the onboarding of consumers. So I would say the basic concept is the same, but then how you layer the services on top of these platforms to provide services to the poor have these specificities. Some of them are driven, like Pakistan has a huge gender gap, so there is a huge focus on gender inclusion and equality in how the services are provided, notably from G2P perspective. We can see in other countries that G2P is, as I mentioned, prevalent as a way to deliver payments to now in COVID. But yeah, I would say the basic method remains the same.
Right.
A
So
real-time payment platform. Yeah.
So it's the differences in country of the relevant, the existence of agencies or common programs and so on. So it is specific to the country, but is the same problem, and solutions are digital solutions have commonalities. You know,
Exactly.
The components required are the same, but they don't apply the same way to every country.
That's right. You know, like for example, you can't achieve real-time payment effect with an ACH. So there is no point in trying to evolve an ACH. You really have that. That's the sort of thinking that we see. Yeah.
Okay. Estelle, any views on that?
Yeah, I fully share that technology is one important aspect, and but there is another layer that is how products are distributed or designed to people, and that makes the difference because the behavior or needs, even in the same country, are different from someone living in the town or in the suburb or in the outside in the agriculture, for example, area. So we have that's the reason also why it is so important to be able, through platforms, networks, to share best practices from a country to another, because there are some common points, common issues from a country to another. But yeah.
Okay, so just to wrap up, thank you for that. Absolutely, I think the best practices and sharing of what worked and specific, almost more important, what doesn't work or what didn't work and why is really important. Is really important. Now, in that same vein, and just to wrap it up, to bring it back to, and both of you mentioned it, you know, financial inclusion is not only in low-income countries. It is present in Europe. It is definitely present in the US. Individuals are either unbanked or underbanked by the millions in high growth or high development countries. And Costa said something before that I'm a true believer in, is that it is likely that solutions that have been thought for low-income countries with little infrastructure, which by definition makes them nimble and easy to implement, are likely to be also relevant. So there will be a reverse leapfrogging here, is the one in which mature countries may adopt solutions that weren't intended for them, but that lightness and the simplicity of them may actually make them very attractive. Is that, what I'm saying makes sense, or you totally disagree, or somehow disagree? Any of you? Estelle, what do you think?
Yes, I think it was inspiring, and if from what I can see in France, just sending money to someone else using the mobile phone number to identify the beneficiary is clearly inspired from Am And
so you're saying it's already happening?
It's already happening, yes.
Costa?
Yeah, so I am in full agreement, and part of my passion being a technologist is this, that what is being thought of in low-income countries actually is relevant, and we will see it in Western countries. If you take, for example, the case of Europe, in Europe, we know what real-time payment is, we know what interoperability is, but very people know still, exactly to Estelle's point, that very few people can send money to each other using only their phone number. And I think we're far from that yet in Europe, which perhaps is the most advanced country in terms of, most advanced region in terms of payments. If you look at America, the United States, it's a super fragmented system there. The closest that we can see would, to this innovation would be Venmo. Mm-hmm. But again, this is a closed loop system. Everybody has to be on. I'm really happy to say that the Fed is looking at real-time payments on a more global basis in the US. So it just shows again how this thinking is coming to non-low income countries because they can see clearly the benefits. From the consumer perspective, I think there is still a lot of friction in the Western system of doing things that we have seen removed in these new systems, being digital systems in low-income countries, in terms of ease of adoption, in terms of ease of service, in terms of costs. There is a huge amount of friction still in the systems that we are there to remove. If you look at just, for example, also foreign remittances, it's a huge domain of future innovation as well. So there is plenty of work to be done, Estelle, for us to beyond what we're doing now.
Okay. Good. Unfortunately, we are running out of time. So I'm going to give you a few minutes to wrap up and maybe leave us with a key message. The audience is a very varied audience we expect for this podcast. So by no means are financial inclusion experts. So we've kept it at a very generic level. But any key messages that you would want to leave with the audience? Any last thoughts would be really welcome. Whoever wants to go.
Please, Estelle, go ahead.
Thank you. I would say, technology is, we are at very, very important, very important moment because we have the technology. Technology is available, and so we have everything in our hands, and to make things better for a lot of people, and the condition or to make it happen is really to stay close to what people need, what are the consumers need, but also stakeholders, how they, different intermediaries, how they can also build the right solutions. So this is more than ever a global issue, and everyone has, and even finding a solution for financial inclusion should be inclusive, and should be with consumers, final consumers, fintechs, and technological solution. But also, I would say, don't forget the traditional stakeholders, such as banks, that also are moving lines to be more inclusive, to be more involved in financial inclusion, and also with the regulatory bodies, which is very important, because we are dealing with discussing, and everything has to do with currency and money, and so it has to be with trust, which would be very, very important.
That's a good thought. Inclusive solutions for financial inclusion. Yes, I totally agree with all the stakeholders and with a focus on the need of the local community. Thank you. Costa?
I would like to address the entrepreneurs listening to this.
Yes, please.
There is 400 million Africans, 1.7 billion global new customers on the cusp of being included with digital systems. So there is a huge amount of innovation and new services to be thought of and provided. So I really would say that this is the new digital world and digital opportunity opening in low-income countries. And I urge everyone and the entrepreneurs to work together with local entrepreneurs to provide these solutions, because this will be the new Ubers will be invented in Africa and Asia.
The Uber for money. Guys, there's a huge opportunity. Get on with it.
Absolutely.
Absolutely. A call for action. A call for action. Thank you very much, Costa. Thank you, Estelle, for joining us today. I think it's been, possibly you are used to much more detail and more, but I thought that keeping it high level was also relevant and interesting as well. Easy to forget how important these things are and how relevant they are to us in every part of the world. It's an interconnected world, and this is, to Costa's message, is a huge opportunity to create inclusive solutions, Estelle, for financial inclusion.
Right.
Thank you very much for joining us today.
Thank you. Pleasure meeting you, Estelle.
Pleasure meeting you, Costa.
Thank you to both of you. And from the FTS group, we are wrapping up this session today. Thank you.